So we just turned the page on, let's face it, a very eventful year, but that doesn't even really mean that the financial markets start over, folks, right? And this is one thing I talk to people about all the time. The annual performance stuff, it's just a brilliant creation by Wall Street marketing. Let me give you an example. Let's say a Wall Street firm recommends XYZ in 2023 at $40, and it closes that year at 20. It's down 50%, right? Then the next year it rebounds to 30 points, $30. It's up 50% for the year. Put that into marketing material. But in reality, XYZ is still down a whole lot, right? Now, listen, sometimes, of course, changing the calendar does change things. Policy, for instance, and policy can influence markets and the economy. But this isn't a game of Monopoly, folks, where we all go to, start from scratch and we go, right? That's not how this works. We do see a changing often of narratives. Now, last year, for instance, market bears were on the offensive right out the gate, right? Complaining about tariffs and immigration policy. They suggested an end to American exceptionalism. They said the whole world was going to dump their U.S. assets. Well, somebody forgot to tell the world because they bought $1.7 trillion of our assets last year. Of course, the experts also told investors that the AI trade was over. You keep hearing that every time you turn on TV. And instead, focus on things like quality. Get in those quality stocks. Here's the problem. Quality is underperformed. Yeah, historically, quality has been fantastic. But the last few years, 2022 to 2025, look at these years. It's been down a lot, right? So the scare campaign, right, with the tariff tantrum, the financial media went all in on this. Of course, the globalists went all in on this. They were upset, and that did send the market much lower. However, this 15-point down move that we had last year, it's only happened a few times, and then the slingshot. Great work from Ryan Dietrich here. A slingshot. The last three times we've had this, the market's been up 17, 13, and 27% respectively. So this year, pretty good track record to follow. Again, someone forgot to tell the market. So listen, setting this slingshot up, according to Ryan Dietrich, was a great thing for last year. With that in mind, momentum from one year doesn't stop on December 31st. As you can see, the biggest winners on the first day of trading, folks, in 2026 were the gargantuan winners of last year. Everyone's talking about AI doesn't work anymore. This is AI, folks. These are the stocks that started January 2nd. SanDisk up 16%. Last year it was up only 567% only. Micron up 10% on Friday, up 240% last year. Western Digital up 300% last year. Lam Research up 141% last year. Comfort up 123%. These were your top four winners on Friday. They're up again really well. Again, I know it's not going to end well for all those folks out there, but here's the point. Someone forgot to tell Wall Street that it's not going to end well because now everyone is piling into the AI memory component of this story. Look at all of these firms that just had to switch from Micron. I'm talking from Rosenblatt, Bernstein, Key, all of them. They had targets at 300. Now they're at the 500 range, right? I want you to keep in mind, for instance, with Micron, this stock was trading at $9.35 in May of 2016. It is up now 34 times your money. The moral of the story for investors is that if you really want to make big money in the stock market, you have to be positioned so Wall Street can chase your portfolio instead of waiting to chase Wall Street's ideas. Now, markets aren't the only thing that the experts have been getting wrong, by the way. They continue to misread President Trump in part because he is shattering all of their beliefs. In a comfortable world that made them rich, listen, the establishment is the establishment for a reason. The left, of course, is upset, and of course, the right is upset as well.